Welcome, everybody, to Better Together Tuesdays, where we make business simple in complex times. And today's topic is understanding payroll tax credits. So I want to welcome you. I'm Joel Barrett. I'm a business development consultant at the Missouri SBDC at UMKC. And together, we're going to make business simple. We started this when the COVID-19 pandemic hit, and we started realizing at the SBDC that we were all receiving a lot of the same kinds of questions and concerns from our clients. And we thought, well, let's try to wrap this into something that's short because we don't need any more 1-hour webinars. So we have this fast-paced 30-minute webinar. And it's based on a quote that we heard or read from Shelley Seifert of the First Bank in St. Louis. She said, surviving and thriving in a crisis is rarely a solo event. So we're going to do this together instead of being solo in this. You're not alone. You've got resources. You've got people on your team, and we're here to help with that. We're going to divide the 30 minutes into 3 segments. They're not equal segments. Just depends on how much information we have in each one of them. The first part is focus, and then we'll go into innovate, and then we'll go into engage. So let's get started. We're going to talk today about understanding payroll tax credits, and I'm pleased to have a couple of guests with me today, and possibly a third one will be joining us. My first guest is Nicola Price. She's with B2BCMobileTax.com. Welcome, Nicola.
Thank you. Thank you for having me.
Yes. If you had to describe your business in 1 or 2 sentences, what would that be?
Let's see, a business for non-traditional entrepreneurs.
Okay. And what do you specialize in?
Taxes and bookkeeping, accounting, payroll.
All right. Awesome. So Nicola's going to answer a lot of questions today because she's my only guest. However, I have a backup with me, a co-host today, my colleague, Rebecca Goebbels. Rebecca also works at the Missouri Small Business Development Center. We're colleagues and friends, and she comes from a wealth of experience. And so we'll be talking together. So thank you, Rebecca, for joining us today.
Thanks for having me.
And possibly Matt Myers will be joining us from Myers CPA. I might be having some problem getting on the webinar, so I'll mention that ahead of time in case he pops in and we won't have to stop and refocus at that point. So during COVID-19, during this pandemic that shut down all these things going on, the EIDL and the PPP and the FLMA and all of these letters that we're throwing around, amongst the things that get thrown around is this thing about payroll tax credits. And I feel like on every call that I'm on, I'm hearing this about payroll tax credits. So I am not going to assume that everybody has the same level of understanding about what they are. So we're going to start real basic. Nicola, what is a payroll tax credit?
Well, a payroll tax credit is a credit that reduces the tax that you owe.
How does it work?
So an employer is responsible for employer taxes, and so that liability, it will decrease that tax liability that that employer has as a result of having employees.
Is it similar to like a child tax credit for a parent when those were?
Yeah, it's similar to that.
Okay.
And it kind of contrasts from a deduction. So like the deduction reduces your income before you apply the taxes. And then once you get to your taxable income, the credit then comes into play.
Okay, so why do these exist? Why did the government decide to make this a thing?
Well, I think it's to motivate people to comply and file taxes. I don't think that if there wasn't a benefit for people, a lot of people would do it. And so by having credits and deductions available for people to take advantage of, it'll kind of motivate people to comply, because it is kind of like a voluntary system, so to speak.
Well, I know that Rebecca and I appreciate people paying their taxes because that is part of what keeps us able to help people. So thank you for paying your taxes. Rebecca, what comment did you have?
Okay, so back to the contrast between a tax credit and a deduction, right? Because that's all the way where I'm starting to like, maybe I thought I knew what this was, but I need to ask more questions.
Mhm.
So a deduction takes your income and reduces your income, and then you're taxed on what remains. Whereas a tax credit is whatever you owe, and then the credit is reduced from what you owe. Is that right?
That's right.
Okay.
That's right.
Okay. So thanks for that clarification. So the when the PPP came around, the CARES Act, there was a lot of talk about payroll tax credits as they pertain to the PPP. Can you shed some light on that, Nicola? How are those different? Are they different? I don't really know. Is this just what's finally being made aware of it?
Yeah, well, so they are different. So if you got the PPP, then you can't take the tax credit as well. So it would kind of be like double dipping.
Oh,
So you would either have to do one or the other. Now you can you can have done the PPP and then take the family and sick leave credit. So you can do those two together, but you can't do the PPP and the retained employee credit.
Rebecca has a finger up.
Yeah. Appropriate fingers for the occasion. So, Nicola, you were talking about if you took the PPP and this kind of thing. So it sounds like as part of the CARES Act, there were two different mechanisms created to try and help employers. Sounds like if you couldn't afford to keep your employees on because of COVID, then the PPP loan was in existence to help fill that gap. But if you could, it sounds like this payroll tax credit is a way to reward people who could afford to and did keep people on staff. Is that right?
Yeah, yeah,
Okay.
that's right. That's right.
So
Um, yeah.
go ahead. No, go ahead.
Yeah, and so the employee retention credit, it is kind of like an incentive and a reward for those employers who did and who could keep their employees on staff. And so not every employer would be eligible for this employee retention credit. It would really be just for those employers who ex- experienced a reduction in business activity and gross receipts for the same as related to the same period last year during the same period.
So how would I know if I'm eligible for any of the ones you've mentioned?
Okay, so um, businesses, so for the PPP, if you have 500 or less employees, then you would be eligible for the PPP. The employer retention credit is for every other business. So it's not really limited by the number of employees.
But you can't use both.
Right, but you can't use both. That's right.
And when is that determined? Is this typically during tax season? I just I'm thinking about someone who maybe this is the first time they've navigated these waters and they're going, so do I need to tell my tax professional about one of these? Will they know? Do I need to be doing, so how would you speak to that?
Yeah, so they would want to talk to their professional because the employee retention credit, it's valid from March the 12th through December 31st. So you would have to have maintained your employees during that period. So you wouldn't necessarily have to. So say a company, they folded, say in November. Well, that doesn't necessarily exclude them from taking advantage of this credit because they did retain their workforce up until that point.
But again, as long as they weren't also using PPP funds during that time, correct?
That's right. That's right.
Now, if let me ask you this question: if I have PPP funds, or excuse me, if I have idle funds of the idle loan and I'm using it, does that disqualify me from the tax credits as well?
That I don't believe so because that is it's a loan.
Uh-huh.
Um,
Right.
and so yeah, I don't believe that
Okay, the loan is
So,
from the grant or the forgivable loan.
Right. Yeah.
yeah, so to clarify, I just want to make sure. So it sounds like the issue is since PPP loans are forgivable and they end up functioning a little bit like a grant in the end,
Mhm.
that's why you can't have these particular credits and a PPP loan. But since the idle loan structure direct from the SBA has no forgivable portion, it's just like any other loan you can have and have a tax credit. And so that's the key difference.
That's the key. Yeah, that's right.
Awesome.
Mm-hmm.
So if I am a small business owner and I want to explore all of this, is there anything what we call landmines that I might be looking for as I explore this? Something red flags, or what would you recommend to someone who's kind of new to all of this?
I would say probably keeping good records of your employees. Some employees might leave. You may have some that come, some that go. Um, Keeping really good records of their time with the company. Um, that would be a big one. That's there.
When you say records, what should be a part of those records?
So the employee pay, name, address, all that different things, their position, their dates of employment, um, whether how their employment ended, so whether it was a voluntary separation or a termination, things of that nature.
This goes along with what we've been hearing, and everything related to the PPP loan as well is document, document, document.
Oh yeah,
It's
yeah,
better
absolutely.
to have too much and not need it than not enough. Rebecca, you have any thoughts about that?
Just the deep truth of if in doubt, write it down. Especially if you're asking somebody for money, whether it's a loan or in this case, a reduction to what you owe in taxes. Every single thing you can think of that relates to payroll in any way for the year 2020, I would make sure I had deeply documented for more than one reason, including these payroll tax credits.
Nicola, is it safe to summarize and say you can never use more than one kind of credit on the same money?
That's true. Yeah, it's safe to say that.
Just wanted to clarify on that.
Mm-hmm.
You were talking about documentation, and maybe this is a good time to kind of move into that innovate part. Right now, tax season is all kind of screwed up. You know, we
Yeah.
skipped over April, and now what is it? July is when tax season is. Is that correct?
Yeah.
What would you say if you don't forget, or if you remember any one thing in tax season in July? Remember this. What would you say to a small business owner about that?
Oh gosh.
It doesn't have to be one thing, but
Yeah. The most important thing, and I know we keep coming back to this, is documentation.
okay.
No matter how small or how minute you may think it is, write it down because you don't know if that's perhaps something we could use or if it will be valid or necessary. That's probably the most important thing. And yet and still, I think a lot of these credits and things have been developed kind of like as we go along. So we're still getting to learn a lot of these, and there may even be changes in the future. So it's constantly changing and things like that. So it's beneficial to stay in contact with your tax person, your CPA, your accountant, and just to kind of stay in the loop.
Rebecca.
What does stay in contact look like in real life? Because, hey, I'm calling them every single time I have a question feels like not it. But I assume they remember I'm a client feels like not it on the other end of the spectrum. So like, what does good communication look like? Like help paint me a picture of like the ballpark I'm shooting for.
So good communication is like if you experience some major change, or if something happens and you're not sure how it affects your business, or maybe even once a month when your financials are produced. That way you can review it and go over and talk about, make plans and discuss um, what could happen and what to do for the future.
Okay, so it sounds like that's when a major change happens to the business monthly. If you pre-plan it, not it's been a month.
Right.
Talk to me right now, right?
Right.
And so as often as monthly with some pre-planning, and if anything major happens, but not, oh, I just heard this today. And so I have a question. Having a question is not the same as something major happening to your business, right?
Right. Yeah, that's right. So like if you say your landlord is you lease a building, and so the landlord is closing the office or something to that effect, and so you need to move and you need advice like how is this going to affect my business? So
Okay,
that's, yeah.
gotcha. So COVID is major, but every single COVID question is too much.
Yes.
Okay, so use discretion and do not go nuts on your tax professional, because they also eventually they'll start charging you by the hour, right?
Yeah.
Okay, which I think is important for people to remember, that even though many of us are friends with our tax professional or have friendly relationships, that they don't work for free. So there's a what's reasonable, and then there's a wackadoodle, and it's sometimes harder to know the line in emergency times.
Yeah. And I also like to include that they don't know everything all the time. And so you might have a question, but it may take time to research and look to see if there's any new developments that may have come across that I don't know about yet. So that's something to consider as well.
You mean you didn't master the PPP ins and outs with the first go round? Neither did we.
Yeah.
I do want to ask you, 'cause we deal with a lot of startups, Rebecca and I do, and a lot of times people are overwhelmed by the idea of bookkeeping and taxes, and then sometimes people feel like they can just do it all themselves. And as I'm hearing you talk, that feels like that would be very ill-advised for a small business owner to try to tackle all of these tax ins and outs by themselves. So I want to ask you the question, and you can answer this in regards to yourself or anybody else, but like, what's the most important thing to remember when choosing a CPA, bookkeeper, tax professional?
So I would say interview them as if you would interview an employee to work in your business. And you may even maybe ask for a reference, um, just to kind of get to know the person. Make sure you two are a good fit.
What am I looking for as I'm doing it? Because I know for me, I'd be like, okay, are you good at what you do? And I'm obviously you're going to say yes, but then end of questions. I don't know. I'm not sure what I should be looking for.
Right. Well, you want to look for someone who has some insight and experience in your industry.
Okay.
Maybe, yeah, industry experience. Maybe someone that's in your industry that you may be a competitor, or maybe not necessarily a competitor, but just have some type of familiarity with the industry that you're in.
And is there a difference between a bookkeeper and a tax professional?
There is a difference. I would say the main difference is uh, the bookkeeper is the one who's involved in the day-to-day. So they classify the transactions, they do things like that, maintain the books. And so from that's passed along to the tax professional. So the tax professional really doesn't have the insight into the day-to-day and how the business runs. They're just preparing the tax return based off the information they got from the bookkeeper for the most part.
All right, I've got the wrong screen up. I was going to share a screen with you here. And I want to thank Nicola for being here today and filling in for two guests. And I want to bring her website up here. See here. There we go. Okay. have you see that then instead of my personal email. Okay. So, Nicola, if people wanted to get in touch with you, how would you recommend they do that?
Phone call.
Phone call? Okay.
Yep.
On her homepage, you can see a lot of information here. There's contact information down here. There's social media links. And you can take advantage of getting connected to her for additional questions. The second time that Nicola's been on the webinar with us today. I also want to remind you that you can always reach out to the Missouri Small Business Development Center. The easiest way to do that is go to the contact. And when you go to contact, there's a form right here that you can fill out. And Michelle, who is on this call, will get that and will make sure that it gets to the appropriate person. So if you don't already have an established counselor, this is the starting place. And don't forget about our partner, Casey SourceLink. Casey SourceLink has a ton of resources available. I always tell people that there's over 200 organizations in Kansas City dedicated to entrepreneurship in some form. And Casey SourceLink exists solely to get you connected to those organizations. So there's so much information, and if you click on this bar right up here, there's an ongoing list that's updated regularly of things related to COVID-19, business resources and updates. We're always happy to have you reach out to us. One-on-one coaching is always available at no charge, and we are going to continue to do the Better Together Tuesdays. Next week, we are talking about forming your exit strategy. I just had to talk to a client today about this and say, okay, at this point, it's hard to do this, but you need to be thinking about how much are you willing to lose or risk before you have to bow out. So we'll be talking about how to form an exit strategy with two different business owners who did exit their business. So it'll be a good session next week on Better Together Tuesdays. Thank you, everyone, for being with us today. Thank you, Nicola. Thank you, Rebecca. And we'll see you next Tuesday together.
Thank you.